Welcome to the trading room. This is Rob Reinhold with Maverick Trading. I'm joined by Darren Fisher. Let's get into the week. But before we jump into the markets, we have some big announcements coming. March Madness is here. Now look, I know that you may not care about this at all. And I agree. If you aren't into this, just go ahead and ignore everything I'm going to say here for the next 30 seconds. I am not a college basketball fan at all. I have watched zero college basketball, and every year I watch zero college basketball until the March Madness tournament. I think March Madness is the best sporting event in the entire year and all across the board because it's 64 teams. You lose, you go home, and until the winner. It's fantastic. So if you want to be part of our 9th annual March Madness tournament, we'll be sending out an email to our traders. And we always have prizes for first, second, and third. Just a lot of fun. If you don't care about this, totally ignore it. But we will be sending emails out to all of our traders with information on joining. All right, let's get into the markets. Last week, we had a big bounce. We've been having weakness over the last couple weeks. And it just drifted lower, but was never able to break. On Thursday, we actually gapped lower. And by the end of the day, we had a big rally to a nice bullish engulfing candle. And then we had a nice follow through on Friday. We gained back in 2 days what it took 2 weeks to lose. It was a really big jump. One of the bad news we got last week was labor costs. Now, again, these reports are usually not very important, but right now people are hyper focused on inflation stuff, and U.S. labor costs really jumped. And that's what caused the gap down. And it caused the 10-year bond to race up above 4%. The first time it's done that since November. And the markets didn't crater. They actually went higher. Let's take a look at the economic news this week. We had a mixed bag of reports here. Durable goods was weaker than expected. And then we got home sales better than expected. We got manufacturing index of Richmond weaker than expected. Consumer confidence weaker than expected. And then all of a sudden, we actually got a fantastic services PMI number at the end of the week. This is a very, very mixed bag, and I think it's just confusing the markets. It wasn't great news this week, and it wasn't terrible. And so whenever we take a look at this, we say, look, this is all just talk. Let's take a look at the actual numbers and the actual charts. This week, we had about a 2% rally across the board. You can see the NASDAQ was the outperformer. Oil and gold had a great week as well. When we take a look at these charts, I want to really focus in on these candles. As you can see, we had about 7 down candles, and then we had these 2 giant green candles. And take a look where we are. Just 2 days ago, we were solidly below the 50-day moving average, and here we are solidly above it, and we're now running into the 20-day moving average. We have some resistance right here at the 405 area on the spiders. It's about 40.60 on the SPX. At this point, we have to say that we are in no man's land. We just are in between moving averages. One is sloping up, one is sloping down. There are so many conflicting signals going on right now. I think it's tough for anyone to make a bold call here. Darren, are you ready to make a bold call here?
Yeah, making a bold call in this market is not something that I would recommend right now. I'm looking at it. We came very far, very fast in the past 2 days. And I mean, that's all it was. If we'd have just, Monday, Tuesday, and Wednesday looked like, well, it was going to be, -1, -2. And then you're right, that the bullish engulfing on Thursday, continuation, confirmation on Friday, we're back right up below that 20-period moving average. So the question is, what have we got going for us? Okay, we've got potential resistance at the 20. Right above it, just almost in the same space is about a $2 band right there where we've got previous, what was support become resistance right there. And it's one of those ones, do we bounce off this? Do we roll right over? I mean, we could claw our way back up to that 415 area, but I think getting through that 20-period moving average is going to be, there's not a lot of upside beyond that. There's about 10 points in upside on the spiders. To get up to there, I think so that's one scenario right there. The other scenario is we hit our head right at that band at the 20, and then we roll back over. So of those two scenarios, I'm going to put 60% that we roll back over to the downside and 40% that we continue to claw our way back up. So not a lot of good odds either way, but I think that's where you have to play. But you know what? I could, my opinion could change Tuesday morning, and I would be completely happy one way or the other if it is. This is one of those things where you've just got to look at portfolio allocation every time you make a trade, and you're going to be looking back. My portfolio allocation, changed from what it should be at a +1 to a 0 back to a -1. And now we're back up. It's just, we're seeing a lot of chop and churn. And the only thing you can do is take a market snapshot at that time and say, how do I need to allocate my portfolio going into this? Really keeping track, how much time is left on each trade, what positions you have coming off, what holes do you need to fill, and that's the best way you can play it. This is not a place where I would want to say you need to go +2 or -2, +3 or -3. This is just going to be a choppy period, and I think we've been banging the drum for the past few weeks. This is the time when you got to play the chicken bulls, the chicken bears, play for theta, and weather it. That's all you do. Just weather these market conditions until it asserts a direction and tells us, okay, I want to go this way in the market for the next 3 months. I think that's about the only thing you can do. We haven't seen conditions like this for, I'd say, 8 years.
Yeah, there is no reason at all to make a bold call here. I mean, through a whole year, you have some times where it's very clear that it's trending. Like, just take a couple of weeks ago, we were at a +2, starting in the first part of January, +2, and we said, hey, let's ride this up. And then we got a little bit defensive about 14 days ago. It's just where we are in the cycles. So the cycle here is just, it's muddy right here. Let's just be cautious. Let's preserve capital. And then when it gets a little bit more clear, we can put all those trades and put all that delta back on. But I think you're right, Darren. Theta is the place to be here. The NASDAQ does look a little bit better. The Qs look better, but we still have the same problems. We still have resistance levels right here, the resistance levels up above. So same thing. I think it's very difficult to make any call here. The VIX is cratered back down below 20, showing you that there's not a lot of fear out there. So again, we are in a point where it's difficult to call where this market's going to go. I've been doing this for 25 years. There are times when I am very clear and I say this is a no-brainer. And there are some times where it's very difficult. And I could say something, but I don't have the data behind me to support it. I could come out and be wildly bearish right here. Here's the problem. The charts don't back that up. So that's just an opinion of mine. I could be wildly bullish. The charts don't back it up. When you look at the facts of what the charts are saying, they're not giving you any clear sign. So ultimately, I'm going to put that upside resistance at 40.60. We're right about there. If we break above that, I think you're right, Darren. I think we go approach previous highs, or we roll over, and that support of 39.60 is the next point to break. If we break that, then we can get more bearish. But until then, chicken bears, chicken bulls, lots of theta, and that is about it. We do hear from Chairman Powell this week. We hear from him on Tuesday and Wednesday. It's going to be very interesting because he's really going to be moving the dollar and the bonds. And I think that is what is going to be moving this market. Right now, the equity market is beholden to interest rates and the strength of the dollar. So as I mentioned, we have Powell testifying on Tuesday and Wednesday. And then we do have the February jobs report on Friday. It got pushed back a week. So here we are on March 10th with the jobs report. That's going to be a big one as well. So lots of fireworks this week. I think this is going to be a very volatile week. I don't know if we're going to get a clear breakout or breakdown, but I do think when you take a look at the end of the week, we're going to have multiple +1 or 2 up or down days, and we may not go anywhere, just a lot of volatility. If you're not ready for that, that volatility can knock a lot of stops out. That's why we think chicken bulls, chicken bears, size for max loss to where you don't have to get out when it puts some pressure on you because you've already sized it for max loss. That's what we like here until we have a clear direction. So you can see we're at a 0 and a 0. That is the biggest solid. We don't know what's going on here, or there's not any clear signals here whatsoever. Anything to add to that, Darren?
No, I mean, we're just in this period of noise. I think is the best way to get it. We're getting conflicting we're getting conflicting data, uh, fundamental data. We're getting conflicting market action. Everything's conflicted. Nobody really has a solid picture of what's going on. We can play that. It's just you've got to be a little bit more nimble, and you've got to be a little more savvy in what strategies you use. And you can see, we had a decent week. Utilities is the only one that was down. It's down only 0.5%. Everything else, a pretty mixed bag. Healthcare, coming in at a low of up 0.5%. Then you got materials. Materials were great. They're up to plus 4%. So there's no real broad market theme that says the market wants to go up as a whole. The market wants to go down as a whole. I mean, then you've got real estate, financials, consumer. They were up too, but they weren't nearly as up as much as the other ones. When you go look at the charts, even though you had these broad moves, we really didn't do a whole lot different. There was only a few of these ratings that changed. So we were looking at utilities right now, and it's still at a -1. Now, if you'd have talked to me on Wednesday, how would I have rated utilities? It had accelerated to the downside, and I'd clearly say, okay, this is a -2. We've kept it at a -1 just because the move had been pretty sedate. Now we're back up, and it's in line with that top trend line. It's still in a downward channel, but it's back up in that range where it just looks like we're slowly following the 20-period moving average down. So by no means am I bullish utilities, but this type of action, Thursday and Friday, it just doesn't merit a -2 when you're retracing that much. There's some strength there. And now you look at the volume, and we had accelerated the downside Tuesday and Wednesday on increasing volume. Volume to the upside, the price movement was great, but the volume was not particularly impressive right there. So again, you're getting mixed signals right there. Now, this is one thing that I struggle with as a trader. I would look at the volume and say, well, the volume wasn't great. I'm just going to ignore this price move. Let me tell you this: you can go broke on low volume. It's the price action always has to trump the volume. The volume is just used as a confirmatory picture, another piece of data. So look at the price movement first. So again, on a utilities, I'm at a -1. Communication services, again, last week we were to 0. Those 2 up days, we're still to 0. We're pegged between the moving averages right here, just right there. If you talk to me on, it still would have been a 0 on Thursday. I mean, you just look at communication services, just an orderly pullback to the 50-period moving average. If you want to say the pullback is done, your confirmation came today on Friday. Let's see where we go. Does that 20-period moving average provide any resistance? Our communication services has been one of the stronger performing sectors. Several weeks ago, we were to +3 in communication services. It was looking really, really good. So if there's any sector that has the opportunity, I think, to break through resistance, to get above the 20-period moving average, get above that 56 level, I think it's going to be communication services. But again, we've got to check on the price action right now. So we're still to 0 on comm services. Real estate, that's another one, -1 last week. Again, a -1 this week. We had that acceleration to the downside, but it totally erased it Thursday and Friday. We're just right back sitting underneath that 50-period moving average. Can we get above it? We're going to see right now. But just a mildly bearish, -1 on real estate. And you're going to see, we don't have anything here that's +2, -2, +3, -3. It's all centered around. It looks a lot like the same picture did 3 weeks ago. We'll see that when we stack everything together. But things are just really compressed towards the middle. So we're looking here at industrials. I'm at a 0 on industrials. You could say +1. I would give me one more candle above that channel right there, and I would positively say, okay, yeah, we're out of this base. Mild ascending triangle, but really a base since the first part of December. We break above that, I think industrials could be one of the stronger sectors to kind of resume what it did between mid-October and the end of December. It was very, very strong. To have this long of a base, essentially almost a 3-month base right here, to break out of that. If the market does go higher, I think industrials is going to be one of the ones that leads it. Looking at healthcare, okay, we were at a -2 and we're just going to be kind of still at that -2. We accelerated to the downside a little bit more than what I wanted to see. We're below both of them. We did make up some of that ground on Thursday and Friday, but if there's one thing that has, look how far away we are from that 20-period moving average. There's a lot of things that are closer to it. Just got a pretty big gap. If we can get a little bit closer to that, I'm more than happy to say otherwise. But right now, I think this one is going to be one of the weaker sectors right here. Over to financials, was at a 0 last week, and we're still at a 0 this week. Paid between those moving averages. Really made back some ground on Thursday. You see that long lower shadow right there. Bulls firmly took control. Carried it over into Friday right there as well. So we're above the 50, below the 20. We're just getting these narrow bands. There's not a lot of space between the 20 and 50 period moving averages and a lot of these things right there. It's just so narrow. If you look at it technically, you could go from daily. You could sometimes reevaluate what your outlook on a particular sector is. That's what happens when you get these really compressed bands. You just got to be nimble and take a look at short-term trades. Take a look at consumer. I'm at a 0 on consumer. It came down, bounced off that 50. We're again in between those moving averages, stuck right there. I mean, this is more towards the middle of the moving averages than some other ones right here. So, this is another one that could quite possibly. It's got a lot of ground to make up before I could say, okay, you rate a +1 right now, and this is one of the ones that I think is in more danger of turning over than some of the other sectors that we've got as well. Tech, 0 last week, again a 0 this week. Give me one more candle above that 20-period moving average, and I'll be quite happy to say, okay, we can go to a +1 on here right now. We're still stuck in that range. That range would be up to 145. We're at 140 right now. It's just this, where do we get above it? If we can break above that 145 mark, then I think tech leads. But this is another one. It's just choppy right now. Everything is choppy. It's been choppy. This has been choppy for a month, and we want to again. This is just the market picture. It's very, very confusing. All right, so materials were at a 0 last week. We're at a +1 this week. Looking pretty good. This turned out better. This was actually materials was actually leading. Materials was actually leading on Tuesday and Wednesday, and we moved up there. And Thursday, Friday, we just got that confirmation. We're still, again, we've got that range-bound problem right now, but this is one of the stronger sectors out there. This is one of the ones we're near the top of the range. This looks to me a lot like industrials. If we can break above that previous hot swing high that we had, I think industrials and materials lead us up there. They also may just continue to be in this base right now. Looking over to energy. We were at a -1 last week. We're at a 0 this week. Again, you see just the compression between the moving averages. And those moving averages have been compressed both to the upside and the downside for the past month. You can even say 2 months right there. So we're just at a nice little 0 right now. You give me a break above that 50-period moving average, I'm happy to go to a +1. It's just we're in this range right now that's very maddening to trade. A lot of stuff in the energy sector looks good sideways. And that's just the way you got to play it. This is one of the ones you just have to play the market in front of you, not the one you want it to be, except that things have changed from a trending market, and just go with what works for you. So let's look at everything. On -1, we've got healthcare, real estate, and utilities. We've got 5 sectors at a 0, technology, consumer, communication services, financials, and energy, and a couple at +1, materials and industrials. I think we break to the upside, like I said, materials and industrials lead us. Then you've got a couple that are going to take a little bit more time to break above those moving averages to move up. But there's a lot of stuff that says, you can see it. If you have this much stuff at 0, there's a lot of people out there saying, I don't want to make any major bets right now. And so I'm going to play it very conservatively, and that's the way we've got to play it as well. So let's take a look at some potential trades. Last week, we were sideways to short VNO. We had a March 2021 bear call spread So this is down 4.3%, closed at 1951. So right now we're at max gain. It's firmly below it, and that's fine. It might look like, oh, I left some money on the table. You know what? Think back to a week ago. We didn't know what was going to happen. This is one of the ones you make the bet. You had a nice credit spread. You've got max delta right now. You still got another couple of weeks of theta left, and that's fine. You just let this thing run out. It looks like it's weak, and this is one of those trades where you could have this thing go back up in the $20.25 range, and you're still going to be looking pretty good. So just let this one run. No reason to take it off right now. And this is the type of things you have to put in your portfolio. It's going to feel like you left money on the table, but you didn't. It's when you get cocky and say, oh, I know that it's going to be in this position, so I'm going to have a $5, $10 target on a spread like this. Now that's when things get really iffy, and you take on more risk than what you should. Define reward, define risk trades. What we're looking at right now is Host Hotels, HST. So we're going to play this one sideways. It's been basing for about 3 weeks right now. Two different ways you can do this. You can either play it, so either way you play it, 17 is going to be right there. You can either play 16, 17, 18, or you can play down to 15, 17, 19. Now, the narrower butterfly is going to pay you off better, but your profit area on the wider butterfly is going to give you a lot more leeway if this thing wants to go one way or the other. So it just depends how much risk you want to take in this market area. If it starts to look like we're accelerating one way or the other, I think I would play the 15, 17, 19 is the way I would play it right there. Communication services. Last week we were short Dish. We had the March 10th, 12:14 bear call. It closed at 11:23. This is the same thing like in VNO. This was down 15%. And again, we're quite happy with it. I don't mind that it blew past our profit target. It blew past our profit target the right way. Just let this thing run out it's got another week of theta left in it. Let it milk itself out, and then end the trade with a max gain. Right now we're looking at Meta. Just had a nice little bull pullback here, confirmed today. How do you want to play this? I think go out to March, do the 185, 190 full call spread right there. You're not asking for it to do much. You're saying, hey, give me 2 weeks. Let's see what you do. I just need you to climb up another $5. And those are the types of trades we're doing. You're looking and say, could this thing get to 200? Yeah, quite possibly. I wouldn't plan on it there. You got to look at it. 190 is where we're at resistance. When it gapped up, it created that resistance at 190. Just play it to the resistance level. Don't ask a whole lot of it. Give it a little bit of time, and just play it with a nice spread. And healthcare, last week we were short WBA, and it had the March 10th 34.36 bear call. This closed at 36.09. We've got a week left in it right now, and let's just let it play out. This goes for a max loss. We size it for max loss. We're not worried about it. We've got a lot of other winners in. Just the cost of doing business. It's one of those ones that could roll back over, get back into our profit area. Take it as a gift and move on. Looking at Teladoc right now, sideways to slightly bearish. Now we're going to look to do this with a targeted butterfly. Do the 22, 25, 28 targeted butterfly. So we're expecting this to come down another, $1.80 in the next couple of weeks. If it does that, we get paid handsomely for it. But right now, the profit area on a trade like that is still pretty good. It looks like it's weak. Let's see if it rolls over. If you want to wait for one, an inside candle or a confirmation candle, go right ahead. This one looks like it just wants to go sideways and slightly down.
Moving into industrials, and I agree with you, Darren, that the industrial sector, if we do move higher, industrials and materials are poised to lead us. Last week, we had a bullish play on United Airlines. It was a great week for UAL, up just under 6% and breaking out of some resistance. So looks really nice here. If the market breaks out and industrials break out, expect this one to continue moving higher. This week, we are looking at another high base here on General Electric. Now, these are awesome trades. When I was a young trader, I had a hard time getting a trade because when a trade goes from 60 up to 80, I think to myself, oh, I would have loved to buy it back at 60, and now it's at 80. I think, oh, I've missed it. I've missed the run. The strongest stocks, when they have these massive runs, they do things like this. They consolidate. They build energy. So again, it's like a sprinter. You ran a 100-yard dash and you need to take a little break to get some energy back. It looks like this thing is ready to break out. So the question is, how do you want to play it? Now, I love to play high bases with diagonal call spreads, with short-term diagonal call spreads. So this here is the March 31st 84, and then sell this Friday's 88. So basically, I'm taking a look up here, 88. If this trade gets up to 88, that's going to be max gain for this week. Now remember, we have to make a decision at the end of the week. Do we want to keep the trade or do we want to get out of it? If this thing's hanging out around $88, I want to stay in it. So I will let that option expire or buy it back, and then I'll be just long calls. This one could potentially have a nice run, probably all the way up to the low 90s if we do get a bullish market move. Let's move on to financials. The financial sector wasn't the best performer. Last week we had a sideways to bullish trade on the CME group, and we had a diagonal call spread and it was down 1%. So on a diagonal call spread, 1% move against you, that's probably a break even or a very small loss. It has more time on it. So we had a target there of 190 on this one for the monthly options expiration. This week, we're going to take a look at Silvergate Capital. Now, I want to first start off with this trade is bonkers. Take a look at the volatility. 2 weeks ago, this was a $22 stock. It's now at $5. This is a bank that has been heavily involved with cryptocurrencies. And 2 days ago, they announced that they are not going to be filing their documents with the SEC and that they are maybe on the edge of going out of business. Understand, whenever you play these kind of trades, this is kind of like an all or nothing. And we saw this with like stuff like Bed Bath & Beyond. So Bed Bath & Beyond is about to go out of business. It was trading at like $2 and it jumped up to $5. And then it went right back down to $2. You get extreme volatility. The way you handle extreme volatility with options is with a vertical spread. So you go long a call, you go short a call. And all of a sudden, you've now taken the volatility out of it. And now you've just said, hey, I'm going to play it through these ranges. So we're looking at doing a 5-7. And you can see here, this is about the most chicken trade. When you take a look at scaling on a stock, this is how we're playing it. It's going to probably on Monday go well past either of these ranges. So we just want to throw it out there for 2 weeks and say, look, we think in 2 weeks' time, the stock weakens from where it is and is likely below 5. If that happens, we have max gain on the trade. This is the only way that I ever trade these crazy stocks is I do a vertical spread and I say, this is where it's going to be. I'll play it between 5 and 7, and other people can have all the craziness that this one brings. This is Silvergate Capital.
So in consumer, last week we were short GameStop. We had the March 10th, 1820 bear call spread. This closed at 1870. A little bit we've got another week left on this. And you can see it's been pretty volatile here. So we're in a profit area right now. Ideally, this will break below 18 in the next week, and it'll be good. I mean, this is down 4.33% in 1 week. So this is pretty good. We got the direction right. Just let it play out, and hopefully this goes for max gain. Right now, we're looking sideways to bearish at Walmart. Okay, a couple of different ways you can do it. I'm liking the diagonal on there. Go long that March 31st 144, and next Friday short that 140 put against it here. We're not asking it to do a whole lot. We're just saying the next week we expect you to go down quite possibly 67 cents. And the way the weakness that this has, it looks like it wants to do that. And then let's reevaluate, at the end of the week. So I think this is the way to play it. Then what I would do if it looks good, if I'm down below 140, 139.75 or something like that, I buy that put back, and then I turn it into another diagonal here. Give it a couple of weeks. Just play as many diagonals as you can on this, cuts your cost basis down, and gives you a nice, a nice bit of theta that you can pull out of this until the very last week, turn it into a vertical spread. I think that's the way to play this if it goes your way. Technology. Last thing we were playing long Seagate Technologies. We had the potential trade was 65.70 bull call spread. The problem is this only triggered on Friday. It had been down. There was no good entry to get into this, and it was only we had the higher high, higher low. Even though it was a red candle right there on Friday, that's where it went down. So if you got into this early, you're probably not liking life very much. But if you want to take a look at this again, your entry point could be today or Monday. It's one of those ones. That's why it's important not to just blindly trade. Have those triggers. And sometimes if you have to get into your positions, 20 minutes before the close, sometimes that's the best way to do it. So you can see how that day's candle is going to bear out. This is one of those situations where you'd want to do that. This week we're looking at NVIDIA with a high base. We're just going to play this one pretty vanilla here. 237.50, 245 bull call spread. Give it 2 weeks. We're very close to right at the money right there. We're saying this thing with the volatility it's got, we could probably pull $7.50 out of it in the next 2 weeks. I think that's a very decent trade. This is one of the few ones. You can look at the scaling here. This has got the strength to do it. If we can break out of that.
In the material sector, the other sector that I think is ready to lead this market higher, if the market can move up to its last high of a couple weeks ago, I think industrials and materials are going to be the place to be. Last week, we did a diagonal call spread on AVTR. It's looking great. Our diagonal call spread is at 25, and it is going out to the March 17th. So this one looks absolutely perfect at this point. Look, if it keeps moving higher, yes, we'll lose a little bit of our profit. If it moves back a little bit, okay, we'll lose a little bit of our profit. But you can see we've got a nice opportunity here for this thing to be a profitable trade. Everything looks great on this. And anyone who's looking for a new trade, I think this thing looks great for a new entry. Looks perfectly fine. I'm going to be taking a look at U.S. Steel. So U.S. Steel, as you can see here, we had a big run up. We ran from 24 up to 30. That's a 25% gain. And what happens? The strongest stocks, they don't pull back. They base. And that's exactly what this one did. Broke out, pulled back, and had two nice little candles here. Big question is, okay, how aggressively do you want to play it? If we were in a +2, +3 market, I would be very aggressive on this. Here's the problem. We're not. So I'm just simply looking to 32. I'm going to do diagonal call spread. There's a risk graph. And it's simply going to be 32 is our max profit point. If it was a different market environment, I'd be more bullish. But because we're not, I'm going to play this as a +1 trade. It very well could end up being a great one that rips higher. I'm just not going to play it that way. And in energy, energy is about the most sideways sector that we've seen. Last week, we had a sideways trade on ExxonMobil, and the trade we had on was it's going to trade between 115 and 105. All right, so it was up a little bit, mostly just because it went up on Friday. It really hung around that 110. We've got one more week on it, and as long as it doesn't blow past 115 or blow past 105, it's going to be a nice little trade for us. This week, we're going sideways again with Schlumberger. Now, I know some of you are saying, Rob, that's not how you say it, but that is how we say it at Maverick. The real company is Schlumberger, but years ago, one of our new traders came to me and said, hey, I'm in this stock called Schlumberger. And I just laughed. I'm like, we were only going to call it Schlumberger from here on out. So sorry, if you're new to Maverick, we have now changed the name of this company. We let them know, but they have not yet changed their saying of their name. We're just going to be doing a sideways trade. So the big question, whenever you do a sideways trade, is where's the midpoint? So we're looking out just 1 week. And where do we think it's going to be in a week? I think the energy sector comes back a little bit, just comes back a tiny bit. So I'm looking at 55 as the midpoint. Right now, the stock's at 56. I'm basically saying I think next week we're going to be down about 1%. So the trade is 59, 55, 51. Our profit area is probably going to be between like 52.50 and 57.50. That wraps up our trades for you. If you have any trades you want to share with the rest of the community, jump on to the Maverick Trading website, log in, go to our forum. And as always, we love it when our traders share trades with each other to try to make everyone a better trader. To wrap this up, we have downshifted from neutral. We were at a -1, and now we've pulled back to a 0. So we went from +2 about 3 weeks ago to +1 to a 0, then to a -1, now back to a 0. As you can see, we're in this area where we can't ask our trades to do much. And we have to expect that we're going to have one day up, one day down, all this chop. There's no need to be a hero. Make the chicken bulls, chicken bears that we always talk about. When the market finally does something, we'll get more aggressive. But until then, I think you want to just be sitting, waiting, still making trades, but make them small, make them without long targets, and just enjoy the chop, because that's probably what we're going to get. You may as well enjoy it because that's what we're likely to get. Anything to add, Darren?
Nope, I think that's it. We've been counting on position sizing, portfolio allocation. This is definitely the time for it. That's the only thing you can do. The name of the game in a market like this is sometimes it's just survival. So pull out what you can.
Well, thank you very much. I think those are very, very wise words. Goodbye, everyone. Have a great weekend.
Good trade, everyone.